Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Joel Elconin, co-host of the Benzinga Pre-Market Prep Show, also editor of the Pre-Market Prep website, which I will post a link to below. Now, Joel, we're starting off this week, and we're going to focus on U.S. equity markets. Even though we're already halfway through the week, it is a shortened trading week, so yesterday, when the markets opened, little bit of weakness in U.S. markets, and today we are continuing to see some of that weakness. The Nasdaq is down pretty much a full percent, and the Dow and S&P, those are both down 0.5%. So again, not a massive sell-off that's going on here, but it does have the bears coming out and saying, look, 2 consecutive down days. The market was already toppy. Maybe this is the start of a larger correction. Joel, what's your takeaway? What do you think is driving some of this weakness in U.S. markets?
Good afternoon, Corey and Shad. Thanks for having me. Seasonality, baby, and it's because seasonality that I'm sure your listeners haven't heard too much of, right? And what I'm referring to is the seasonality of the Jewish holidays. An old adage in the market: sell Rosh Hashanah, buy Yom Kippur, and the philosophy behind it is that the Jewish people, the followers of the Jewish faith, they began their 10 days of repentance between Rosh Hashanah and Yom Kippur, and they want to be free from thinking about, the markets and material things. So they dispose of their positions in the markets. They reflect on how they can be a better person in the following year over the 10 days. And at the conclusion of Yom Kippur, they're free to go back to the markets, and then they rebuy the markets. Now, the adage has had, mixed historical returns over the years, but what's really interesting is the way that it's taking place this year. And what I mean by that is that you have the Jewish calendar is 13 months. It's 1 month longer than our calendar. So the Jewish holidays never fall at the exact same time. They can come from early September all the way to mid-October. Now, I confirmed this with my mother-in-law, who's 85 years old, and this is the first time that either of us can remember that they call Erev Rosh Hashanah has fallen on Labor Day. It's never happened before. So I got a 4-day weekend instead of a 3-day weekend because I took yesterday off for services. So you have the confluence of, the Labor Day, the market being closed. So the last trading day was Friday, and sales on Friday. If you had exited the market, you only missed a couple ticks off the all-time closing high after the jobs report. And then also you have another circumstance taking place today, which is we've talked about rollover in the futures contracts, and they only trade on quarterly months: March, June, September, and December. So market participants have to roll their futures contracts over. If you're long to September and you want to keep that position, you have to sell the September, buy the December, and then the opposite is short. So what it does is it creates vacuums in the market, a little bit less liquidity as these larger participants, try and roll their contracts over. Some just do it, boom, like immediately. Market orders both, and the spread gets out of whack. Some people are much more strategic the way they do it. And back when I was in the floor in the late 80s and early 90s, there were some traders that you only saw them during the rollover, and because they identified the trends in the rollover, and they would trade it all the way until the expiration. So you have that, and then to put a bow on everything, Yom Kippur concludes next Thursday, right? At sundown on Thursday, you're allowed to break the fast and then return to the markets on Friday, a week from Friday. But what's next? What's next Friday? It's quadruple witch expiration, which is normally a volatile day, and September is a more volatile month. So a lot of different circumstances going into this, and it's probably all hogwash and just buy the dip, wins forever. But for me, from this long-term follow of the markets and this Jewish tradition, that's a lot to handle. But that's what you're seeing in the markets today, and perhaps through the expiration next week.
Well, Joel, thanks for walking us through some of the seasonality patterns there. And also, thanks for putting a bow on it for us. I love that with the quad witching. So, my question for you, I was going to ask you about some of these options expiration and rollover periods and how they can be a little turbulent. Do you find your experience, being on the floor and, being around a lot of guys that managed funds and manage money, that a lot of people rotate sectors during this time and maybe close out an option in one space, start another one, so that we may see more of that money shuffling around from one sector to another during these windows of time?
I think you would just have a constant rotation in this market, right? And it's the constant rotation just keeps us where we're at. Just like even today, you're going down. You're going to find things are green. So I think it was probably more pronounced, in earlier years. From a personal standpoint, I know, while I knew some traders that just loved the expirations and they showed up for them. I had other traders, buddies of mine, that wouldn't trade from this Wednesday until after the expiration because of the volatility. I think that they're turning points in the market. These expirations are. You have a lot of volume trading. You have unwinding of positions. You have initiation of new positions. And one term that I just kind of, picked up, over the last year and a half, and then believe me, I'm no options expert, is like the gamma unwind. And I think what happened a lot during, last year's meltdown coming up on the March expiration and the June expiration is that these, the gamma, the tail was, like people had to reel in positions that what that they had to do that was not under normal circumstances. So, but now I think we're everyone learns from their mistakes. Maybe these option traders don't have as much exposure, so the gamma effect is not going to be as much. But it's always great to mark that work things close on expiration on that Friday and sets the trend. Perhaps either a major top could happen on Friday or a major bottom. Right now, we have our resistance levels in the S&Ps to follow. So maybe we get back up to that level, we have a major top, or maybe we continue to sell off. But definitely turning points in the markets for sure.
So Joel, when it comes to, let's look at support levels for the market. I have the S&P chart here. For me, what really stands out is the 50-day moving average. Pretty much this whole year, the market has bounced right off that 50-day moving average, and that usually coincided with the lower Bollinger Band, and the market bounced back quickly. Not to make it too simplistic, but is that what markets, or is that what investors need to look at here, is simply that 50-day moving average?
You know, I'm not a 50-day moving average guy or a 200-day moving average guy. I'm more, looking at daily levels and weekly levels. I mean, keep in mind, Corey, we have only had back-to-back down weeks in the market on two occasions this year. I believe in February and I believe in April. We haven't even finished the week yet. I mean, we could have a down week. We have 2 more days, but and if that's not begging for a correction, I don't know what is. My weekly numbers, that I do over the weekend, obviously, said that there was a possibility that, my weekly swing level is up. The market gave it up yesterday. So I'm more inclined, to play the market from the short side today. That's a rare occasion. The market has been so strong, closing the week on the highs, boom, not having much of a pullback or a continuation move on Monday, which is Tuesday in this week. So for me, we took out last week's low, right? And the S&Ps. I mean, we only took it out by like 8 points. So for me, I don't know where the 50-day moving average is coming in, but I'm looking at this low for today, 44.92. Last week's low was 4,400. I have an area. I have a zone. I mean, that's my zone. That is, I am not getting bearish until we take that out and, continue lower. On the upside, um, I have a boundary, which is two closes from Thursday and Friday. The all-time closing high at 35 and a quarter, and then we closed on that was Thursday. On Friday, kind of a rocky session. We closed at 34 and a half. So those are my boundaries right now, and it's kind of tight because that's what the market's been. So we hold this 44.96. Boom, I'm still in the bull camp, right? We get above that double close area, and we got a shot at new all-time highs. So the market's giving you some good levels. You just have to respect them and be able to adapt.
Yeah, fair enough, Joel. And just to update you, that 50-day moving average, it's 44.16. So that is right in your range, kind of at the lower part of that range. So, Joel, if we take a step back then and look at any data or any comments that you've been paying more attention to, is there anything out there that you think investors need to note that could give us some more, I guess, foresight into where the economy is going or how much support we might have underneath these markets from, again, just forecasts or any data that you've been reviewing?
Man, as far as data goes, I mean, you had that they didn't like the jobs number, right? On Friday, and people look at that both ways. Well, oh, that means that rates aren't going up, right? Because the government, you can't do that. And if the numbers would have been strong, it would have been like, oh, look at this economy, it's rolling. I think from a data standpoint, I mean, when are rates going up? And people are banging. The guys that predicted September this year, well, they're wrong. I don't think rates are going up at the end of by the end of this year, and who knows where they're going to be going up in 22. So I think as long as you have this low interest rate environment, you have a lot of cash on the sidelines. This is still, the best place to be, right? And until that changes, until you get a big turn in interest rates, I don't see that trend being disrupted.
Joel, one final comment then. What about the home builders? Some of the forecasts we've seen have come in lower. Now, the home builders, home prices, those continue to rise. Those continue to support, some wealth creation for individuals. Any significance there on the home builders and them lowering some of their forecasts?
Yeah, there's a good point there, and that's a big part of the economy. And you had Pulte Homes coming out. Now on the bearish camp here. You had Pulte Homes PHM, which is trading in the red by almost a little over 4.5% today. They came out and said input costs are going up, right? And so did Sherwin-Williams. So that's both. You build a house, you need to paint it. So that that's like a little warning flag that, hey, maybe this isn't transitory, right? Maybe we have a little bit more inflation. So I would keep, those stocks have pulled back from their highs. I also keep an eye on something like Rocket Mortgage. I mean, this stock is trading right off its all-time low. You think about the IPO, you think, what better environment could it be for the housing market in a mortgage lender than this? So, there's a little bit of caution in there. I'd keep an eye on your home builders, also United Wholesale Mortgage Holding Company. I mean, there's a little bit. If you had to ask me, what I'm concerned about, that would be, is there inflation? They're eventually going to have to pass on the higher prices? And is that going to, be the fly in the ointment that disrupts the economy? So that would be my cautionary tale for today.
All right, Joel, great chatting with you, buddy. Thank you for the update, and very interesting in terms of what could very well be causing this weakness, this last just couple day weakness in the markets. We'll see how it all plays out, and again, we'll see if any of the support levels will actually be broken in these markets, because boy, oh boy, they haven't been in a while. Joel, thanks as always for your time, buddy. Have a great rest of your week.
Okay, thanks for having me.